Good morning, traders. Today is Wednesday, December 7th. My name is Charles, and this is the Pirate Traders live stream. All right, well, we are opening inside yesterday's range, inside the overnight range, so we are expecting, you guessed it, chop zone. We got to chop it up. So it looks like the first move was a counter auction to the upside, got us right back to the closing price from yesterday. And we're also heading back up once again to test the balance area low. We're testing it right now as we speak, 39.46. If this holds as resistance the way it held in the overnight, this is very strong resistance we have above here. If it holds as resistance, that is very bearish for a potential breakout to the downside. When you have a market that is in balance like this, bouncing up and down inside a range, if it finally breaks out of that range, it can get a big move to the downside. So if this resistance holds from the overnight, we get smacked back down below yesterday's range and find some resistance there. That's just extremely bearish that we are breaking out of this balance area to the downside. Okay. The alternative is that we could just break through that resistance, get back up into the balance, and that then has the opposite effect. Oops, there we go. So if we're able to get through all this resistance and stay back up in the balance area, then we increase the odds that we're rotating right back up to the opposite end of balance. Okay? So it's a pretty big deal which way the market breaks from this 46 level. If it breaks to the upside, it's likely to head back up towards the opposite end of balance. If it breaks to the downside, it's likely to begin the process of breaking out to the downside, of excess to the downside, which would be very bearish. Now, door number 3 is just rotating all day right here on the balance area, literally pretty much in the overnight range, just kind of going sideways in here all day. That is also a possibility, but in my mind, the least likely scenario. I think we're going to try to break one way or another here. And it looks like they're going to try to do it right now. Moment of truth. Can they get above that overnight high? If they do, can they find support? Or do they just look above and fail and pull back in? Right now we got a weak high, so they're definitely going to try. All right, so pushing above the overnight high is bullish. We are back inside the balance area, and we are above the overnight high. So now the question becomes, can this level right here at 54 become support? Can we bring in the buyers up here at the overnight high? If so, it gets bullish for continuation to the upside. Can they hold it? Moment of truth here. We're watching these ticks. Can they keep them above the zero line? Can they keep bringing in buyers up here at the overnight high? If so, that's new business. If not, more chop. So far, I'm seeing good support. Can they hold it? They seem to want to take the market higher. All right, well, it doesn't seem like they have quite enough support yet, but this is feeling bullish to me. So I'm looking to test the halfback here at 39.44 and see if there's some buyers waiting there for support. Okay, so now let's test this halfback. Can this hold as support? Same as before. Can they keep those ticks above the zero line? So far, they're doing it. They're bringing in buyers up here. Didn't quite have enough. Will there be enough here? Double R asks, can you explain in some detail the meaning behind the term the market got too short or too long? Yeah, so the market goes up as long as there are more people that want to buy, right? More people that want to get long. And eventually you run out of those people. Eventually every person on planet Earth who wanted to push the buy button this morning first thing already pushed it. And we figured that out when we got up here. So up here above yesterday's high, the market got itself overly long. And we know that because the higher and higher that it went, the less and less volume that we saw at the high. Do you see that? How it's tapering off less and less? That is fewer and fewer people were willing to go long up here. And so the market ran out of steam and it had to pull back down. Now it looked for more buyers here at the overnight high, right? But they weren't there. So now we had to pull back down again. Now, let's say we don't find the buyers at all. Let's say the support breaks and we start heading back down to the open price. Well, the market could go and get itself overly short. It could push back down, dip below yesterday's low, get taper there, just like it did in the overnight, come right back up because it doesn't have the sellers to keep going down there. So that's what the market's doing all day. That's what the two-way auction process is the market hunting for buyers and sellers. Are there buyers up here? Nope. Okay, let me go look down here. Are there buyers down here? Okay, cool. Let me go look up here again. There's no more buyers up here? Okay, cool. Then I have to go down here. Speaking of which, that support is breaking, increasing the odds of more chop. And so that's what the market is doing. It's just constantly hunting for more buyers or more sellers. So when it gets itself too long, that just means too many people went long. No one left to go long. Every guy that was going to buy this morning already bought. And now the only people left are sellers and those buyers holding inventory. But they bought their inventory up here. So the further down the price goes, the more of those buyers will become sellers. They will unload that inventory down here at a lower price. They will accept the loss and the market will get more momentum down. And so that's what causes them to then get overly short. Every guy that was going to get squeezed out from up here gets squeezed out and then it comes back up and da. Welcome to a chop zone where they just chop it up. Nor Auto Trader, good morning to you. He says, Q, take a look. Take a look. It's in the queue. The price action. Okay, NQ getting bearish here. As we start to push below yesterday's low, we recognize two things right now for the NQ is bearish. It's below balanced as well. Okay, so now what this is telling us is that there is a higher probability that the market is going to break out of balance to the downside. Why? Why do we think that? Well, they opened this morning. They could not get back in the balance area. They could not get through that resistance in the overnight high. Now we're below yesterday's low. What does that mean? Continuation of the trend. So now you have a breakout of balance and a continuation of the trend lower. Lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And now once again today, lower high, lower low, value lower. So that's very bearish. Generally, when you break out of balance, you look for a range that is somewhere around the size of the balance area. So a potential move to the downside from here could be looking at the 11,250s. Okay. So now we're looking for resistance at yesterday's low on the Q. Do the sellers step in at 11,502? ES still in a chop zone, still chopping it up here. ES won't get bearish like that until it gets below its low at 21. I would say the ES looks more neutral, but the Q looks very bearish. Double R, so the term doesn't refer to there being too many people going long at the top of an uptrend? Too many people? Yeah, that's exactly what I just said. Overly long is too many people long, no one left to go long. Overly short is too many people short, no one left to go short. I'm using today's chart as an example because it's in front of me, but yeah, any trend, any momentum, whether it's short-term momentum on a 5-minute basis that may last for 20 minutes, or it's longer-term momentum on the daily, like we just pointed out with the Q. This right here on the daily was the market getting itself overly long. And now we're finding out if the market's going to get itself overly short or if we're going to get continuation. So I just used the shorter time frame to explain, but it's all the same. Are there sellers? Double R, I thought that term was where people were getting overly long or short, creating an imbalance. Yeah, that's what I'm talking about. So if you got long up here, right, you're a buyer. You were a buyer in the market. You were positive momentum. You were trying to push the market higher. Okay? But you didn't get anything. The market didn't go higher. So the market came back down. You're still in your trade. You are still a buyer in the market right now. But it goes down more. And then it goes down more. And at some point, you no longer are a buyer. At some point, you go, all right, forget it. I'm out of my trade, and you sell. That's the market. It got itself overly long. Too much inventory to one side. And so the only way to balance off that inventory is to squeeze out these guys. You got to make them no longer long, and then the market can go back to neutral. And you do that by squeezing them, by pulling them back to their stop below the opening price. And then you do it to the shorts. You get them all short, you come back and you squeeze them out too. Double R. So short them? Yes, sir. When you see the market running out of buyers, you don't want to be a buyer. You want to be a seller. And vice versa. Baby Q says, what a wacky opening. Not really. It makes perfect sense. We're right on a balance area. You know what I mean? This is such a pivotal place for the market. It's going to be such a large break. You know what I mean? It's either going to make a 50-point move to the upside or a 50-point move to the downside. So spending some time chopping up and down in here, trying to make up our mind which way we're going to go, that sounds like something the market would love to do. They never make it easy when you're right on a balance area high or a balance area low. They always play games with you. And then out of nowhere, pachoo, they take it wherever they're going to take it. Lest we forget, the last time we were here, we spent 2 days. 2 days doing nothing but rotating on top of the balance area low. We could easily spend 2 days rotating underneath it. Doubletree, so overly short is the same thing. Shorts running out of steam. Yep, exactly. Again, just as a hypothetical, let's say the reason the market had to come back down here below the opening price was to stop out the buyers, the people that were buying up here. We had to squeeze them out, okay? So the market came back down, and they became sellers down here. Well, that's where we're starting to see that volume right there, okay? We're squeezing all these buyers from before. But now what we want to know is that it? Is that all the buyers there was? I'm sorry, sellers there was down here? Just the people that were long getting squeezed? Is that the only sellers? Or do we have more sellers that want to keep it going? Right? We don't know right now at this moment. But if it reverses and comes back up, then we know. Okay, cool. We ran out of sellers down there. That's where they got themselves overly short. We looked at the taper. We saw that there was only 93 people, sorry, wrong section. 200 people, 1,000 people, 1,600, 2,000, less and less and less people willing to go short down here. So this is where they're getting themselves overly short. So we watch the ticks. If they get the ticks back above the zero line now, we know, boom, they're heading right back up. Time to squeeze all the people that were going short here by bringing price back up to here. If the ticks hold, if they can keep it below the zero line here, well, then we know, no, we're not running out of sellers down here. We're getting new sellers, new business, and so they can keep it going. But we must just wait and see. That's the fun of a chop zone. You gotta wait while they chop it up. So Q still bearish. Again, they're building up momentum. They're building up volume below yesterday's low. So that is new sellers on the Q. I'd still describe the ES as neutral, but the Q is bearish. Tale of two markets. Greg, the human brain undermines simple analysis. I know. Believe me, I know. Many are the days I've spent hours and hours repeating the same thing again and again and again, and people keep trying to make it more complicated. Well, no, but what about this? Well, what about that? But are you sure it's like, yep, it's just that. It's just simple. John Lash, potential bot attack incoming. What time? Oh, at 10. Thanks for the heads up. Daniel, can you tell if we're running out of buyers or sellers from your chart? Yes, sir. Taper in the volume. All right, there's that bot attack. All right, so we are now finding the ticks are staying below the zero line. We're getting new sellers below the opening price, which is bearish to see. Okay. We also just got the initial balance pushing to the downside, which is a little bit bearish. And we also have the value area the value area pushing up against the low of the day. That is also bearish to see. So this increases the odds that we're heading down to test yesterday's low at 39.20. And we're going to look for more sellers down there. Is that the level? Look what happened in the overnight. As soon as they poked down there, they ran out of sellers. Look at that taper. Less and less people. So does that happen again today? Do we just poke down there and come right back up? Or like we just did with the opening price, do we bring in new sellers down there? If we do, I would consider it a breakout of balance and very bearish for continuation. But I do still think we need to poke below like the overnight did and see if there's business down there. It's very important to think about what happened the last time we were here. The market closed over here. The overnight came down here to see if it wanted to go lower. And just look at the TPOs. Look at the letters. Very few letters down here. The market spent very little time down here. As soon as it came down here, it turned around and went back up. Do you see that? Lots of time up here, very little time down here. Same thing with the volume. Very little volume down here. It's very thin. Not a lot of business happening down here. Lots of volume up here. Thick volume up here. So the last time we poked down below yesterday's range, we got nothing for it. The market got itself overly short. So it is bearish that we are breaking out of balance. It is bearish that the initial balance is to the downside. It's bearish that the value area is up against the low of the day. But I still, to be absolutely certain, need to see sellers down here to be convinced we're ready for that breakout. So now the focus is, do they turn previous support into, previous resistance hold? Can they hold the resistance here around 34 that we're currently testing? If not, can the halfback hold up here at 41? If either of those can hold as resistance, it increases the odds that we're heading down to test yesterday's low to find out if there's sellers down there. Okay, first resistance didn't hold. Now we're testing the halfback. All right, moment of truth. Are we still in a chop zone, or are they ready to try to break lower? Can the halfback hold? Nope. So this is exactly what I was just talking about. We now know, we didn't know at the time, but we now know they got themselves overly short. And now as the market is working its way higher, what's happening to those sellers from down here? They're now becoming buyers. They're getting squeezed and they're having to go long up here. So now we start the auction to the upside. And we just keep chopping until they pick a direction. Chop, chop, chop all morning long. Chop, chop, chop while I sing this song. Gonna take the price up and down. Gonna freak them all out everywhere around. MBBQ, it's a 30-point chop zone. Yeah. But the what makes a chop zone its own thing, what makes it unique, is not the size of the range. It's the unpredictability of it. It's the fact that it functions in a way to constantly convince you this is the moment. Now we're about to go. We're about to break. We're going to go higher. We're going to go lower. We're going to go higher. We're going to go lower. And it just keeps getting you to go long and then squeezing you and getting you to go short and squeeze you. So it doesn't really matter what the range is. I don't mess with it. If it was a 100-point chop zone, I'd still just let it chop and mind my own business. Because until you have confirmation of a break, it can be infuriating to try to predict when and where the market will reverse. Invictus, it's not the size of the range that matters, but the flow in the ocean. The motion in the ocean. That's exactly right. It is funny to me how quite literally the two-way auction process resembles high tides and low tides. Like surfing and trading are very, very similar to one another. Our job as traders is not to try to catch every little wave, but to paddle out and wait for that one perfect, beautiful curl. And then ride it all the way to shore. Guys, I haven't even had coffee yet, and I'm sounding super philosophical over here. Double R, according to Jim Dalton, a wider initial balance is less likely to break or harder to break. I would say it's harder to get follow through, but it's not harder to break. But I would say if you have a giant range, like if you have a small initial balance range and you break out initial balance to the downside, it's easier to kind of get some follow through. Whereas if you have a huge range and then you break through, there may not be much left. You may have already worn everybody out. But breaking it is definitely there. All right, well, there's something happening. Someone said something. The liquidity went dark, so this is news driven. Nuclear war. No, not if we're still inside the chop zone. That would look a lot different. Oh, no, you're right. Sorry. Russia views nuclear weapons as a deterrent to an attack. The threat of nuclear war is coming from Putin. Fuck, that is going to tank the market. Ladies and gentlemen, saddle up. If we break yesterday's low, this bad boy's going down. MacVin's looking at Bookmap. All the volume is gone. Yes, sir. That's what happens when a news-driven event happens. So all this volume that you see over here, all this liquidity, that's bots trading. And when a news-driven event comes out, they shut off. They turn off all those bots. And they switch from bots that are designed to just kind of what we've been talking about, to squeeze you one way, squeeze you the other way, squeeze you one way, to play that game. Those bots just turned off. And now the new news bots reacting to the news have taken control of the market. And when the news bots take control, it's just chaos till they're done. No two ways about it. You could actually say that this makes it less likely that he'll use them. You know what I mean? Because he's specifically saying as a response to an attack. But then, of course, you could argue he's just saying this now so he can nuke somebody and claim they attacked him first. I don't know. I'm just saying. These news bots don't have an easy job figuring out how to interpret that. It might not be so bad. All right. Well, they're holding. All right, we can see we still haven't brought the liquidity back. We're starting to. But this is still news bots making up their mind. How do they feel about a threat of war? All right, so now as we're starting to see the liquidity stepping in here, this is our good old-fashioned bracket bots that we're used to seeing. So let's see which way the market starts to break from here. Do we start bringing in new sellers, or can we keep the ticks above the zero line? Greg H. Yes, thank you. Please like the pirate. There's 200 people here, and most of you hate me. All right, so as we start to test the halfback here for support, if it breaks, okay, if we push below the halfback and the ticks push below the zero line, I will get bearish at that point, and I'll be looking for that halfback to turn into resistance. At what point does a market maker or dealer have to rebalance their books? Does this ever happen in low liquidity conditions? That's not my forte. All right, so there's the break of half back. Once again, I will say that makes me start to feel bearish. And I want to see it become resistance. I want to see 41 become resistance. If they can keep, every time it pushes in there, if we keep smacking price down, and then we can keep those ticks below the zero line over here, I'll be looking to head down and test yesterday's low. Can they get resistance, or will the chop continue? That is the question. Double R. Should I ask more questions about stealing loot? Yes. Thank God. So this is something I'm finally an expert in. Infinity, you have an upward trend line I was looking at? Do you mean on the daily? Oh, yeah. No, that'll probably be a good support there. And it is kind of perfectly lined up for the breakout of balance. You got a balance area. You break out of balance. Boom. Perfect test. Anthony says erratic market. Yeah, you're telling me. I'm literally just sitting here in my head thinking like, please market, just give me a trade. Just do something. Just pick a direction. Ah. Also an erotic market. Boom, chicka, bow, wow. All right. Well, it seems they're breaking to the upside. The buyers seem to be taking control. They got the ticks back above the zero line. They got through the resistance at that previous bounce area low. So now we're back to playing the game. Can they turn it into support? So we'll be looking. Can they now turn this area around 44 into support? If so, we'll look for continuation to the upside. All right, well, as we print the C period here, bigger picture, I can make it really, really, really easy for you. Are you ready for this? It's never been, no trade setup has ever been so simple in all the history of the world. If we break the initial balance to the upside, look for the market to try to get to the opposite end of balance. It may not, but that's what it'll be trying to do. And if it breaks the initial balance to the downside, look for a breakout to the downside and continuation in that direction. Simple as that. So, of course, like I said, we're looking to pull back in here, pull back into this 45 area and test it for support once more. But if that holds, that is breaking back into the balance area, finding support, which would be bullish. Earlier, somebody asked about the market getting itself overly long. One signal it's doing that is when the ticks get above positive 1,000. Now, of course, that doesn't mean you short the market when the ticks get above there. They can spend a lot of time up there. But just once they're up there, you know the market's starting to get itself a little bit overly long. Needs to come back looking for that sweet, sweet support. And with that, I wish you all a wonderful rest of your day trading. As I said earlier this morning, it is possible. There is a realm of possibility where we just go sideways all day on the balance area low. Why do I say that? Well, because that's what we did last time we were here, right? We came down here to the balance area low. We just went sideways. Did it for 2 days. So it's very possible we have another day like that. But to me, that is the least likely scenario. The more likely scenario is we either break the initial balance and start heading up, or we break the initial balance and start heading down. Okay. With that, I will bid you farewell and see you mañana. Members of the brigade, you know what time it is. It's time to party. I can't find the brigade card. Anyway, all right, have a good day.